In this video, we'll be explaining how risk on risk off sentiment is simply another way of describing the current mood that the market is in. We'll also be showing you how to identify those moods and how you can possibly trade them as well. Hi, it's Arne here from Forex Source, and before you begin, hit the button below to follow or subscribe so that you'll be notified every time that we release a new video. Okay, so when the market is said to be risk on, it actually just means that the traders and investors are in a really positive mood. They're feeling very optimistic and are prepared to take on some additional risk in order to make more money. This means that they will buy assets that tend to give them a higher yield. This will be things like stocks, shares, commodities, and high beta currencies like the Kiwi dollar, Aussie dollar, and Canadian dollar. Also, currencies with a higher interest rate attached to them are also attractive targets for traders and investors during risk-on sentiment. Now, naturally, during these positive risk-on periods, those assets that are higher yielding tend to rise in value. Now, if you're trading and you notice that the market is currently risk-on, you should be buying the major currencies that have the highest interest rate at the time, or the classic high beta currencies. When the market is said to be risk-off, then the opposite is obviously true. It means that traders and investors are in a very negative mood. Currently, they're feeling very depressed, they're feeling very worried, and uncertainty has gripped the markets. This means that they will sell all their risky assets in favor of low-risk, safe haven assets. Now, a safe haven doesn't give you very much yield, but it also doesn't fall in value too much either. It's a great place to store your money in the short term until the market panic blows over. Now, safe haven assets include things like gold, government bonds, and traditionally low-risk currencies such as the Japanese yen or the Swiss franc. Now, during normal risk-off circumstances, the Japanese yen is the most reliable currency to buy and hold in the short term. Now, all this buying naturally makes the price rise, which can lead to some great trades if you can react in time. And that's basically what risk on and risk off tones or sentiment means. Now, if you notice that the market is risk on, focus on buying the high beta currencies or the major currencies with the highest interest rates attached to them, and vice versa. If you notice that the market is currently risk off and panic and stressed, focus on buying the safe haven currencies like the Japanese yen or the Swiss franc instead. It's also a great idea for you to pair these currencies intelligently together as well. For example, if you are buying a safe haven currency like the yen in a risk-off environment, pair that against a high beta currency or a high yielding one, and vice versa. This will give you the optimal trades and the best chance of catching the biggest moves from risk on and risk on sentiment. Now, if you are interested to see how we implement risk sentiment in our own trading, make sure to check out our daily video commentary or live webinars inside the Forex Source terminal.